Welcome to this episode of Hardman Talks. I'm Larissa Adams from Hardman & Co. And I'm so excited to be joined by our guest here today, Randall Crowder. He's COO of Phunware. Phunware is a high-growth NASDAQ-listed company. It's a mobile software and blockchain company that produces mobile applications for advertising and marketing purposes, such as personalized ad targeting, location tracking, and also cryptocurrency brand loyalty programs. So we're really excited to hear from Randall. It's quite a mouthful of of an intro for a company and what you do. So we're excited to hear what Phunware is all about and where the growth opportunities lie for the business. So Randall, it's a real pleasure to have you on Hardman Talks. So how are you doing today?
No, Larissa, I really appreciate you having me. I think you do a stellar job with these, and so it's an honor to be here.
Great stuff. Okay, so today the business encompasses activities across mobile platforms for enterprises, crypto tokens, blockchain, and big data analytics. These are quite big words. Could you give us a brief history of the company and how we got to this point in terms of capabilities?
Yeah, it's a mouthful, and you're right. And I think, when people I literally just had a conversation with a large investment bank, and they said, look, we have really great analysts, but we have one that really dives into emerging crypto companies. We have one that's crazy good and really well followed in ad tech. We have another one that dominates the SaaS sector. Who should we pick? All of them? We do a little bit of everything, right? But, rewind back to 2009 when we started the company. The hypothesis was very simple, and it was a lot easier to explain what we did. We helped large brands transition from web to mobile. That was it. Back in 2009, less than 3% of internet content was consumed on mobile. And so we made a big bet that mobile was going to become some of the most valuable real estate on the planet to a brand, because it was always connected to a network and increasingly always connected to a human being. And so we built the first NFL app, the first NASCAR app, all of Fox Media Group's mobile application portfolio. We did the Sochi Olympics, where we set a record for the most live streams for a live event. We've done a presidential election. We've done hotels, hospitals, luxury residential, sporting stadiums, you name it, we've probably done it. And so we got really good at building large enterprise mobile ecosystems that were designed to engage customers. And so as we kind of went through that, we started thinking, there's got to be a better way. Every good entrepreneur does, right? And so we took everything that we knew about mobile and we built a platform that would allow you to license mobile software the same way you would license a CRM from Salesforce, which is totally different. The first half of our, existence was custom development, low margin. You're always chasing the next brand, and there has to be a better way, right? So now our platform, when you standardize on us, we're getting 70-75% gross margin instead of 20, much better. Investors love that. But it also allows us to put out more features, more capabilities, which we can get to it in a little bit, but that's the name of the game now. We helped usher in the era of mobile. Now we're helping usher in the era of digital transformation. And that's this idea of taking advantage of all the technology in the real world, accessing all the data in the virtual world, and informing all of those really rich real world experiences that customers are having. So let's turn every venue into a smart venue and better engage consumers in a world where just having a mobile application is no longer good enough. It's what are you doing with that mobile application to either drive productivity or drive profitability?
Okay. I suppose your location-based services, that's really the key component of the platform. So how protected is that intellectual property around it? And what is the next step of development for the technology?
Absolutely. So, it is one of the key competitive advantages, but you got to have more than one, right? And so, I will always say team is our first and greatest competitive advantage. We have an average tenure of over 6 years for our employees. The C-suite and the leadership have known each other for over 9. That kind of continuity is an unbeatable competitive advantage. But when you get to the technology, you're 100% right. So we beat Google for Kaiser Permanente's business because of our location software. And that location software, for anybody that's not familiar with it, you'll hear it referred to as location-based services. But really what that is if outdoors, you can use a satellite and GPS to find people to do things like, all your navigation and your ride sharing and things like that. I was in the military for a long time, so we use GPS for a lot of other reasons. Go inside, none of that works. And so what happens when you go inside? There's still all these moments to engage people that are dependent on location, but satellites don't work anymore. So what do you use? Location-based services is the idea of harnessing all of that signal strength inside a building to triangulate a mobile device. Everybody claims to be able to do this. Well, they do not. We are the best provider of location-based services in the world. I do not say that because I'm a boastful entrepreneur, even though I am. I say that because we beat everybody else. Sub 1 meter accuracy, sub 1 second latency, real-time indoor positioning. So a real-time blue dot. I know what seat you're sitting in at a conference room table. And if you get up and move seats, I can watch you walk around that conference table. Nobody else can do that to that level of fidelity. We beat Google, so I know that we can beat them. We beat 4 other vendors to do it on a cruise ship. They didn't think it was possible because it's now no longer a lat long issue. You're dealing with the yaw of the ocean, and it's almost like accelerometer problem. We did it for the Center for Intelligent Buildings, which is a building that Carrier owns down in Florida, to basically land a massive distribution agreement with Carrier, integrating our technology into one of their flagship products. It's a $20 billion New York Stock Exchange company. Letting anyone integrate someone else's technology into their technology is a tough row to hoe. We ended up doing that because they didn't think it was possible. The Center for Intelligent Buildings looks like a museum. It looks like MoMA. It's book matched marble, glass, soaring atriums, beautiful, not a dust in sight, not a speck of dust in sight. And so they said, look, it's almost impossible to do that in this building, because we're not going to let you put hardware anywhere. We have a design aesthetic. You can't see anything. It's just the multiple story foyer and atriums. It just doesn't make sense. You're not going to be able to do it. So hold on, give us a shot. Let's see if we can do it. And if we do it, you got to sign this deal. So spoiler alert, we did it, and they signed the deal. And so our ability to do this is 100% going to be table stakes going forward. And people are going to look back in 4 or 5 years and realize, oh my God, like that's what was required. And if you think about it, you see this in Hollywood all the time. If you've seen Minority Report with Tom Cruise, a lot of people have seen it now because everybody's excited about Top Gun, right? So they're going back and seeing all those old movies. Minority Report, all the advertisements are personalizing to him as he's walking through the mall of the future, and he walks up to the Gap of the future and a hologram pops up and starts talking to him. All of that would require location-based services. Back to the Future 2, I'm old. Michael J. Fox almost getting eaten by a shark. That's proximity messaging. That's location-based services. And so how you trigger interactions in the real world with digital signage, any sort of personalized experiences. If I want to access my hotel room with my phone, if I want to access an elevator with my phone, if I want to trigger certain coupons or rewards because you're in a stadium and you're walking past, merchandise that I'm trying to sell you, I got to be able to find you in that moment. And so our platform is designed to get the right content to the right person at the right time in the right place to drive productivity and profitability. And so it's going to be table stakes for anybody trying to engage people in a smart venue. You're going to have a location layer, and we do it better than anyone.
It's absolutely incredible, the technology and where you can plug it in and how many industries it affects. And it's incredible and impressive. Okay.
You know what's exciting about it too is also how customers are using it. So a lot of the reasons why we beat everyone else at this is because we haven't punted the hard problems. And so when you asked about this, and I failed to answer you, completely, we have a lot of intellectual property around this. So if you Google Phunware patents, we actually one of our last patents that we announced was this idea of indoor-outdoor switching of our location-based services. And it sounds like kind of silly and obvious, but to technology companies, it's not. So think about that. So we just launched at Atlantis in the Bahamas. This is if you've never been to Atlantis in the Bahamas, it's an entire island. It's 140 acres. It's 5 distinct properties, countless restaurants, a casino, a water park, an aquarium, all of this beachfront activity. And so people kept getting lost, and people kept not being able to discover all of the amazing things that they had available to guests while they were at their stay. So we gave them our smart hospitality solution. And one of the leading factors for them making that decision was the location software. software. So now if you download it, really cool map, looks three-dimensional. You see all the palm trees, you know exactly where you are on the island in the property. But there's all these different buildings, there's pergolas, there's awnings, you're indoor, outdoor. To a user, you don't care what technology you're leveraging in order to define location. You just want your location defined. So if you're outdoors, we're using satellites. The minute you go inside, we're switching to possibly a beacon, and then maybe switching to high, low density Wi-Fi, and then switching back, you go back outside, it goes right back to a satellite. So that indoor, outdoor switching has to happen seamlessly. We have patents around that, and we have really great algorithms and technology around that as well. Because what people don't realize, and I know this firsthand, fighting in a couple wars, when GPS is functioning, it does not look as good as it does in your ride sharing app. When you're driving along a street and taking turns, that's algorithms making it seem like you're on a street. Real GPS has 10-meter standard deviation. It's bouncing all over the place. It's not that good. And so you need computer programming for a user to make sense of that. So we do that as well. But then there's also really cool features and functionality that we rolled out, like landmark routing. So instead of, if you're at a hotel, I might not understand what go 10 feet, take a right means, especially if I'm from the north. In Texas, we do everything by landmarks. You're going to go down to the end of the carpet where the carpet meets a tile. You're going to take a left. You're going to see a water fountain on your right. Go past the water fountain, take a right. That's how we talk. And so you'd be amazed at how many people resonate with landmark routing instead of 20 feet, 10 feet, 3 feet, that kind of thing. And so we do that out of the box. And then the last really cool feature that I just found this out because I don't have kids in Atlantis, we're ADA compliant. So because all of our routing is ADA compliant, we were just doing that because that's being good stewards of our customers. Some people have disabilities and they can't go downstairs. So we wanted to make it accessible to everybody. Atlantis said, who loves this? Parents. Because they all have strollers. And I was like, wow, I didn't even think about that. So
classic, really cool. Of course.
Yeah, parents, they switch on ADA compliance, so they're not going downstairs with strollers with their kids. And I was like, oh, that's genius. We thought of that. I mean, of course, you had to take credit for it, but that was accidental. And so, I think location-based services, we've just thought more holistically around it, and that's why we've built a better product than anyone else.
Yeah, fantastic. Okay, well. The company's been very clear about its mission, which is partly to help consumers avoid their data being collected and used for financial gain without their permission and without compensation being provided to the owners of that data. But I guess for investors to have a better understanding of the value in this, do you believe this is a big component of your competitive edge? And will it help you secure commercial clients in the future, or has it already helped you in that respect?
Absolutely. It's a great question. So everything that we've been talking about so far is this idea of contextual engagement. That's what we built, MaaS or multi-screen as a service to do. We've never pivoted the company. We're always looking to leverage technology to better engage customers on behalf of brands. And so blockchain, I would argue, we'll go 80-20, just a golden rule, but it's probably more than that. We'll say 80% of blockchain technologies, do not need to use blockchain. They're just chasing a fad. It doesn't actually provide anything different. And so for anybody trying to innovate inside of, kind of crypto, if you're going to take on that challenge, it really should provide a very direct benefit to the ecosystem, something you couldn't have done before. So for us, it actually does. And because we work with such large enterprise clients, I can tell you why it's very unique for us. So first and foremost, contextual engagement to get to here. Then we thought, all right, if that engagement is so valuable to a brand, if either driving productivity or driving profitability matters to either top line or bottom line, would brands be willing to actually incentivize that engagement? And every single one of them is like, absolutely. So take hospitals, for example. Healthcare is one of our leading industries. It's so important in healthcare to have mobile apps that they call it a digital front door. They don't even call it a mobile app because you're accessing bill pay, pharmacy, discharge protocols, electronic medical records, all under one flagship mobile application that we deliver out of the box, pre-integrated with all of our features and functionality. Well, one of the biggest issues and why they love our location software is it's $150 billion a year problem every year in the United States alone because of patients missing or being late to their appointment. It sounds absurd, but it's $150 billion a year problem. And so every hospital executive is trying to figure out how to solve for this. Well, good news is our location-based services can dynamically load balance clinician schedules. We can help people. Google will get you to the address, but once you get to a hospital campus, it gets real complicated and you don't know where to park and where to go and what level to park on. So we can help with all that. But they wanted to take it one step further. What if we just incentivize people to show up on time? What do we give them something in return for something? And so we started ripping on that idea with PhunToken, which is valuing engagement. Being on time for your doctor's appointment, being 2 hours early for an international flight, checking a bag instead of trying to shove that massive bag into overhead storage and delaying the flight, sharing something with a friend, referring a friend, watching a commercial, answering a survey video. You do these things all the time. Every time you click something, share something, like something, watch something, do something.
Now you're being incentivized and rewarded.
Exactly.
Yeah.
You're generating all this data. So let's go ahead and incentivize people to basically engage with brands. So the one thing we're probably not doing that much of is trying to necessarily hide people from the world. I think people recognize that they're being tracked and monitored all the time anyways. What we want to do is create a new model that makes it more fair. If you're anyways getting compensated for your data, you should be compensated, or you should at least be partially compensated for it. And you don't need a credit agency or Facebook or Google in the middle, basically taking all the monetary rewards for all of your activity. You should be cut in on that deal. And if you do that, you'll more likely provide good data. I'll tell people what I want. People love to buy, they just hate to be sold, and they really hate to be exploited. And everybody kind of knows their data is being exploited, but what else can you do? We want to create an entirely new model to reimagine that is basically a decentralized data economy. You can't do that without blockchain. So you have to basically push data down to the consumer level, encrypt it on a mobile device or a computer. You control it. You decide what you share. You decide how you want to engage. And then there's a handshake there. You can choose to engage or not, but if you do, there's something in it for you beyond just the service. It's also the data being created. So all of that is what we call picks and shovels in our model. That's PhunToken. It's live now. What we want to do with that is use that to source and create richer, better, more valuable data. When that data is sold, we also want to pay you for that. That's PhunCoin. So if picks and shovels are PhunToken, PhunCoin's the gold mine. Now, PhunCoin's a regulated security token. Now, as a public company, we are the first to do this ever. So talk about milestones. We're the first public company to basically issue its own digital asset in this manner. And we have not one, but two. So PhunToken as a utility token, PhunCoin as a security token, value of engagement, value of data. And so what that will create is this really virtuous ecosystem that is self-sustaining and decentralized, but it will empower consumers to take control of their data, be in charge of how they engage with brands. And then if anybody gets compensated for their data or their engagement, the consumer gets cut in on that deal.
These are basic consumer characteristics and behavioral patterns that are it's giving them the power back. And I think there's been a bad rap with consumers they're just getting taken advantage of. And so everyone's scared when it comes to data exploitation and privacy. So this is a really strong mission to actually stand by.
It really is. And the bigger, you think about like what's in it for investors, it's massive because we live in an on-demand economy and everybody has ADD and limited loyalty. And so, this old school way of, basically advertising was always about building awareness. I want to, basically, I'm going to show you, let's be honest, it was, old school, hypnosis or just brainwashing. I'm going to flash, this brand at you all the time. Billboard, commercial. Oh, Super Bowl commercial, billboard. And you're not even really paying attention to it, but they're just trying to put it in front of you enough time so that when you do eventually, you're in a position where you could possibly engage with that brand or buy their product, you'll think of them almost subconsciously. People, human beings evolve. We're inherently, problematic in that way. And so we've learned to not click on banner ads, not pay attention to noise. We are very good at being, not being distracted by all the nonsense. Yeah. And so brands are struggling with that. If anybody's ever sold anything on Facebook today, today it's way harder than it was 2 years ago. And so, whether it's Apple and Google trying to exert monopolistic control, taking away the cookie, making different privacy settings, what they're really doing is making it very hard for brands to reach consumers. But consumers still want to buy stuff. So you've got to create a different relationship. And so if Google created AdWords in a PC-driven world in which it was all about just awareness, we want to do something similar, but we want to do it experientially. We want to be able to reach people at a time and place of their choosing when they're most likely willing to make a decision. And we want to create the enterprise platform to do that at scale. Because at like 11:30, I'm buying lunch. I'm eating somewhere.
Mm-hmm.
Who wants to offer me something? If Saturday night I'm going to dinner, I'm gonna eat dinner. I'm a walking.
Yes, you're doing it anyway.
I'm a walking $150 payday. Somebody talk to me. I don't want to find you. You find me. Tell me what it's worth for me to come to your establishment. Absolutely. If I've got $60,000 in the bank, I'm going to buy a car. What's it worth to you? If I'm sitting in a BMW dealership, would Lexus try to reach me in that moment? Would Mercedes try to reach me in that moment? We actually have a platform to enable that called geoconquesting. So we can find out different brands that might still be interested in your attention when there's a purchase intent identified. And that'll change everything.
Okay. So the company's acquired a significant quantity of Bitcoin from its cash reserves. So what's the rationale here? Talk us through this. And, what are there plans to continue doing this in the future?
Yeah, so it's funny. For as long as, we're just very sensationalist, species. And so, every single time the market crashes, this is the big one.
This is it.
Yeah,
this is not a drill.
It's like, well, have you ever been right? Well, no. Has the market always recovered? Well, yeah. If you've held Bitcoin for at least 3 years, no one has ever lost money.
Yeah.
If you back out to the macro, the S&P has gone up and to the right since the dawn of time. So sure. I'm not worried about the market not recovering until I see zombies running around the streets. At that point, all right, maybe it is the big one. But as long as everything is kind of, we haven't gone off the rails, the market
will recover. It's not the apocalypse yet.
Exactly. And so anybody that's thinking about treasury, and this is where consumers get in such a bad spot, is they don't admit this. They YOLO into stocks or they YOLO into crypto, and they don't have enough money to cover rent, and they freak out when the price goes down. Well, you shouldn't be investing your rent money in any of these assets. You should, if you look at any major wealth manager, any one percenter, any major fund, they basically have, allocations, diversified portfolio, and they just continue to build and build and build over time. You have no intention of selling, and so you just start accumulating. We're not in it to day trade. And so accumulating Bitcoin, people are like, oh, it went down. And, Amazon went from $100, and lost, it traded under 100 for a decade. 4 different times, the price crashed by 60%. One time it crashed by over 90%. Guess what? All of us would love to go back in time and invest in Amazon below 100 for 10 years. And if all you did was just accumulate for 10 years, we wouldn't be working today. And so for us, Bitcoin is just a better place, even with the volatility, it's a better place to park cash than anywhere else. Okay. It will be more valuable, tomorrow than it is today. Yeah. Guaranteed.
So what I'm hearing is the strategy is to continue on this path again. Yep. Okay. Fair enough. Brilliant. So if we just change direction slightly and we talk about Phunware's share price, what are the big growth opportunities investors and shareholders can assign value to that they may not necessarily be pricing in right now?
Yeah, great question. First and foremost, a lot of what has put us in this position, sadly, and it's no fault but our own, we chose to go public, are things that are totally unrelated to the company. If we were a private, with what we have now, if we were a private company going out and raising money in Silicon Valley, we'd be raising probably close to $1 billion valuation, even with the revenue profile. And this is what I spent 10 years as a VC. If I look at companies that are merging with SPACs now, and looking at there's a company, I won't name them now, and they were like, we've got 1.6 billion user profiles, and that's their big claim to fame, that they have 1.6 billion user profiles that they can use that are not personally identifiable information, just anonymized profiles of users that they can target for advertising or data monetization. Well, Phunware has 15 billion. So are we 15x their $1 billion valuation? So there's a huge disconnect in timing. We went public at probably the worst possible time. So it was December 2018, right before the US government shut down. A lot of things ended up happening tied to the SPAC we chose to go public with. We didn't take any money when we went public. And then the SPAC had all these warrant holders who ended up being able to cashless exercise over 7 million warrants, basically no cost basis, created a stock price. And so unfortunately, because of that just massive chunk of dilution tied to the SPAC, who didn't give us any money when we went public, and again, we made the choice, so no crying over spilled milk, we ended up finding ourselves at a price point that we should have never been. We haven't been valued this low since 2013, like our Series B. We were up and to the right every private round as a private company when we were raising $100 million as a private company. And so, you can't cry over spilled milk. It is what it is. But once you're public, how people view you and how they view your KPIs and how they value you totally change. Because now it's a free market. You're looking at not only people who are professional traders, with the retail, we have a huge retail presence. They have a different mindset towards valuation than, say, a couple venture capital firms in Silicon Valley. And so, unfortunately, this is where we are. But I say it as, fortunately, this is a great entry point for all investors to get in at, because you're getting in at a valuation that we gave Silicon Valley investors 10 years ago. What people are missing is the foundational approach that we've taken to this. It's not a fly-by-night promise that we have to go raise money to develop. We have it now. We know this because we did it. In mobile, when we were trying to sell people mobile applications in 2009, 2010, nobody understood it. And then all of a sudden, 5 years later, everybody's got to have it. And so this happens every single time. When you see a new innovation, the masses don't get it, but the people who are persistent and actually can commercialize it. You think Bezos was worried about the disconnect between the value of the company and the perception of investors for the 10 years he was working on Amazon, that nobody cared? They traded below 100. No, he knew that the world was quickly approaching an on-demand economy when nobody else knew what on-demand even meant. And so he built the infrastructure for an on-demand economy. We're doing the exact same thing. We're building the infrastructure for on-demand engagement and experiences in a smart world. And you're going to need our technology in order to deliver that. And so what you see is this kind of aha moment coming along. And people already experience digital transformation all the time. Happened with flying. Now everybody uses barcodes on their phone to board a flight. 6, 7 years ago, no one did. I mean, it was the technology didn't work. Yeah, it was always a pain in the butt. You couldn't do it. You have to print something in, you try it. Well, now everybody does it. You go to some hotels in Vegas now, you use your phone to get, you don't even go to the check-in desk. You check in on your phone, you get your phone accesses the hotel room. That'll be common in a couple of years. And so all of that requires our technology. And so people are missing the need for what we've built, but a lot of people are figuring out. It's why Atlantis went with us. It's why all these hospitals go with us. They're understanding that you can't risk your business on a startup. You need something that's tried, true, and proven. And so we have a really great kind of front runner advantage and experience. But on top of that, people don't understand our indirect channel strategy. So we don't want to sell direct forever. We want to be Microsoft Office. Let's sell the phone companies and the computer companies one time, have it be on every phone, and then we make money every time they sell phones and computers. So Carrier was a great use case in that, but they're not the only one. HID, billion-dollar business unit of Assa Abloy, they're the dominant player in smart locks. they've white labeled and licensed our smart workplace solution. Cox of broadband internet fame, multi-billion-dollar company, they've licensed our smart healthcare solution. We've got, a bunch of other ones like Lutron and, Sirius and Tech Data, all licensing aspects of our platform in order to basically offer that to their, Rolodex, their distribution network. And so as we start to get, deal reg portals, set up, collateral in place, training bars, training other sales forces, and they begin selling this, I think, it starts to ramp a lot faster than people are really thinking right now. So there's a disconnect in the technology that we have, how transformational it really is, and then our strategy and how quickly we can begin to grow and ramp.
I see that. Okay, continuing on from this, I guess, financially speaking, can you briefly talk us through what the last 12 months has looked like for Phunware, and if you have the required financial backing to achieve your growth objectives, or where you'd like to see the company going?
Yeah, it's a great question. So I think we are at an inflection point, despite, the market crash, which is unfortunate. Going into Q3 last year, we did 50% revenue growth. Going into Q4, we projected 100% revenue growth. We did 150. Q1, we just reported, we did over 310% year over year. We've already, kind of given guidance that Q2 will do over 270% year over year growth. And so we've got the right kind of, wind at our backs right now. I think one of the biggest concerns for people over the last couple of years has been our balance sheet. We ended Q1 with $34 million on our balance sheet. So we have a much stronger balance sheet today than we did in the past. So to your point, great operational runway, a lot of resources at our disposal, to include the Bitcoin that we have. Obviously, any given day you look at it, it's unfortunate, because I think a lot of retail investors don't understand how the SEC makes you report Bitcoin, but you basically have to take a loss anytime it goes down, but you don't get to mark it back up anytime it goes up. And so, if Bitcoin recovers, to the price, so let's say, it's 50,000 or more, we have a massive asset, just sitting on our balance sheet that is masquerading as a much smaller reported asset. And so that gives us a lot of flexibility. And then because we trade so well, a lot of people, if they're new to the Phunware story, we have great volume and liquidity for what we're doing and for our size. Last October, we did $6.5 billion in less than 24 hours on a single day. And so, that gets a lot of attention. It's a commercial you can't really pay for. So PHUN, the ticker symbol, is paid attention to by a lot of people. And so we get courted by, investment bankers and banks and investors all the time. The good thing about that is we can kind of call our own shot. And so to the extent that we do anything, whether we wanted to do something organically or we wanted to do something inorganically, like with acquisition financing, we're very dilution minded, because all the founders and all the C-suite kind of have significant skin in the game. We would look for debt if we were going to do it. So we have no intention of really exploring a lot of dilutive things right now. We don't have a need to explore a lot of dilutive things right now. So that should be music to the ears of all investors, that we're well positioned. We kind of have what we need to be able to grow from here. We'll be opportunistic. I think that, you have to be responsible in a market like this. There's a lot of people who aren't going to make it out of this market. There's a lot of people who don't have enough runway. That's an opportunity for us, quite frankly. We're looking at a few acquisitions that we might make because there's really great companies with really great people and really great fundamentals, but they don't have access to capital the way we do. They don't have the relationships that we do. And so if we can, find accretive acquisitions that both, scratch a strategic itch, but also, are profitable, that's something that we're looking at very strongly. But mostly you're looking at debt options for that, just because of the profitability of the companies we're looking at. So, this is I think the last 12 months will prove to be a defining 12 months for us, as we kind of hopefully distance ourselves from the pandemic. We have a great pipeline of things that we've kind of gotten to the finish line and are just now, really looking to close. So hope to have some really exciting announcements here coming up soon.
Excellent. Okay. Well, we've got the last question, and I think you've sort of been touching on this in little sound bites here and there, but I think if we could just round it off and just discuss what are the key takeaways you would like UK-based investors to go away with and absorb about Phunware and the investment case, as if, this is the first time they're ever hearing about Phunware. What would you like them to go away with?
Yeah, it's funny. If you invest long enough, you hear these stories of, I coulda, woulda, shoulda. I remember when Apple, was I have investors who, had the opportunity to invest in Google and Apple when they were, nobody knew they were Google and Apple. And so, or people saying like, oh, I remember when Uber was this. And, there's a couple people who invested $25,000 in an early round that turned into, tens of millions of dollars. You always kind of have those moments in life where you're like, I heard about that company and I did that. I'm going to make certain that people do that with Phunware. We are going to make certain that people do that with Phunware. They're going to be like, I remember Larissa was talking to this company and they were like $100 million market cap. And like, oh my God, like they're a Fortune 500 company now. I had a chance to invest and I didn't. So, as much as I'd love to be an altruistic human being, I love the I told you so. I'll be honest. Yeah. I'm a greedy capitalist, and I love when I can tell someone I told you so. This company, we've already done it once with mobile, and we're going to do it again with this. Being able to engage consumers in a mobile-first world that's quickly becoming mobile-only, you have to have seen everything in mobile to be able to do it well. There are things that we've done, things that we've built into our platform that we only know how to do because we've experienced it so many times. Like, how do you deal with, so location sharing? If I have a smart workplace solution and I want to share my location while I'm at work, but I don't want to share my location once I leave, how do you handle that? And how do you get around, certain settings? And how do you do that switching to make sure that you're doing right by the consumer? Most people don't have that built into their platform because they don't have customers. They don't have anybody that's ever had that problem. We've got customers. We've been doing this in the real world for a very long time. And what we have now is game changing. And it's what you've been looking at in Hollywood forever. We are going to make it a reality. And so all of the things where you go somewhere and technology just springs to life and it serves you. It's no longer you going into your phone saying, hey, Siri, and you have to have an idea of what you're looking for. That should all happen autonomously. The marriage of data and opportunity so that we're informing all of your real world experiences and we're helping brands engage with consumers in a more authentic way. That engagement has to be contextual. So it has to be personal and relevant, and it has to be on your terms. And anybody who can do that is going to have a Fortune 100 company. Certainly, if not a Fortune 20 company. It's a massive idea, and we're gonna throw our hat in the ring and try to deliver it to customers. So I think that people should pay attention because this is going to be a defining technology, and we're going to be a defining company in this technology space.
Brilliant. I love how strong that is. Keep that energy. I think it's great. And thank you so much for giving us such an awesome interview. It's been great having you on Hardman Talks. Thanks for joining us.
No, thank you for having me. I really appreciate it, Larissa. And you have a wonderful rest of the day.
Brilliant. You too. And to our viewers, please don't forget to like and subscribe to our channel. We appreciate your time. Otherwise, we will see you back here on Hardman Talks next time. Thanks so much.